And our prediction at Bitwise is it'll get to $200,000 this year. I think this cycle, which I'd really say lasts through this decade, I think it probably gets to about parity to gold. At current prices, that's a little over $1 million. I think this is summer of accumulation because this is like the end of the window where you could get in ahead of institutions. And if you have no hedge or you wait to put your hedge on, it's just way too late. Right now, if you're at zero, you're 100% exposed to the fiat system. The really important thing is just, so I don't think anyone can out Saylor in what he's doing.
Bitcoin Zelle stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zelle today and enjoy the new edge. Matt Hougan dives into Bitcoin's current state, its rising role in finance, and what's coming next. Let's hear his insights. This won't end well.
If you think about what's happened to Bitcoin over the last 18 months, there's really been two big changes. One, it's become significantly easier for traditional investors to access it with the advent of ETFs and some of the regulatory improvements. It's been de-risked. At the same time, the urgency of accessing it has increased with sort of rising debts and deficits and concerns about fiat debasement and people wanting broad-based exposure. The reason I'm calling it the summer of accumulation is behind the scenes every day. What Bitwise does is it talks to these large institutional investors and large wealth management platforms, people who control hundreds of billions and trillions of dollars. And no joke, every week, a new one of these platforms turns on exposure to Bitcoin. They let people invest in it for the first time ever. Really, almost every week, we could say another $1 trillion opens up to Bitcoin. We're going through this one-time phase where institutional investors are moving into the Bitcoin space. And there's, trillions of dollars of money that needs exposure to Bitcoin. We have this vanishing window to get in ahead of those trillions of dollars of institutional capital. And I just think you have to make use of this summer. Every time the Bitcoin ticks sideways, I think of it as a little gift to me, more time to accumulate sats, more time to build the Bitcoin position before the largest money in the world comes in. This is a one-time deal. It'll happen. The price will go higher, in my view, significantly higher, and then we'll be at a new normal. So this is like the end of the window where you can get in ahead of institutions, and it's changing really, really fast. People have not rotated into treasuries as a safe haven asset. For the last 40 years, when there was a macro crisis or a geopolitical crisis or some shake in the financial market, the first thing traders did, the first thing institutions did, was to buy U.S. treasuries. They were the safe haven store of value. And so you would see yields drop and liquidity increase. And Mohamed El-Erian, obviously one of the most important investors in the world, ex-PIMCO, part of Allianz, a global force, not a Bitcoin degen, noted that we're not seeing that at all, right? During these recent macro crises, the yields don't move on treasuries and the volume doesn't increase. Instead, where the money goes is first into gold and then within a day or two into Bitcoin, right? In other words, the world's safe haven asset is shifting from treasuries to hard assets like gold and Bitcoin. And that's just an enormous change. I mean, that's a sea change, 40 years of treasuries being the safe haven asset. We're not making this up. It's looking at the data. The data is showing investors no longer treat that as such. Treasuries are something else. The safe haven asset, the asset you rotate into, is gold and Bitcoin. And that's like a canary in the coal mine in terms of how portfolios are going to orient themselves. They're all going to have exposure to these hard assets, these stores of value, because they're the biggest hedge against, sort of the really destabilizing risks in the world. It's just really notable to me that that's happening right in front of your eyes.
That's the warning from Galaxy Digital CEO Mike Novagratz, and he's not holding back. With pressure mounting on Federal Reserve Chair Jerome Powell to cut interest rates, Novagratz is urging investors to buy Bitcoin fast. The reason? He sees rising political attacks on Powell as a threat to the very independence of the Fed, something that could destabilize financial markets and further inflate the U.S. dollar. Powell has resisted political pressure, staying firm on holding interest rates high to tame inflation. But that resistance is drawing fire, especially from some Republican figures and voices like FHFA Director Bill Pulte, who even accused Powell of lying during his recent congressional testimony. Critics want lower rates now, hoping it'll jumpstart the economy by easing borrowing. But Powell isn't budging, pointing to inflation still sitting well above the Fed's 2% goal and strong job numbers that don't support a rate cut yet. To Novagratz, these attacks are Banana Republic moves evidence that politics is creeping into monetary policy. That's where Bitcoin comes in. If the Fed's credibility erodes and the dollar weakens under pressure, Bitcoin stands tall as a hedge. In times of uncertainty, Novagratz believes Bitcoin isn't just an asset, it's a shield.
I think they're starting to. I think if you've looked throughout this year, there have been moments where the stock market has fallen during the tariff tantrum, for instance, and Bitcoin has diverged. In fact, this is actually, that was actually the first macro shock in Bitcoin's history, really, where it had an inverse correlation with stocks. And I think what separates this macro shock from the past or the tariff macro shock, it was the first time that there were ETFs. It was the first time that there were options on Bitcoin. So it was the first time it was easy for traditional investors to access it and use it as a macro tool. And what they showed is, sure enough, they're going to use it the way it is as a hedge. I think if you look, particularly over the last few years, what we've seen is the same pattern. Sometimes on the day of a macro shock, you see Bitcoin fall. I think the studies show that if the NASDAQ falls 2%, Bitcoin tends to fall 2.6%. But if you look over the next week or the next month, at least over the last few years, you've seen Bitcoin recover and then some. So I think these correlations are going to continue to go down. I think it's even happening now. It's just not quite at the reaction trigger. It takes the market a few days to recalibrate. But what we've seen is that once it sort of gets its footing, it finds its way into Bitcoin as the hedge exposure. And, I think we're going to see this decoupling increasingly. It's just a different asset today. It's less of a risk asset. It's more of a hedge asset than it was 5 years ago. It was much riskier. So I think this is a natural evolution of what Bitcoin is.
Bitcoin may be soaring above $110,000, but not everyone is celebrating. XRP advocate Eduardo Fina has issued a bold warning to Bitcoin holders, urging them to look beyond the hype and question the deeper implications of recent massive BTC movements. Over 80,000 Bitcoin worth nearly $9 billion was moved from long-dormant wallets, some untouched since 2011. While many in the Bitcoin community shrugged it off, Fina sees red flags everywhere. He believes these large-scale transfers aren't just routine, but signal potential instability. While none of the BTC has hit exchanges yet, some market watchers worry a major sell-off could be brewing, especially during a time of extreme bullish sentiment. Fina is frustrated that Bitcoin believers refuse to engage with these warning signs, claiming they are blinded by arrogance. Taking his critique further, Fina accused Bitcoin figurehead Michael Saylor of being a government contractor pushing a false narrative. He suggests that Saylor's influence is part of a coordinated effort to mislead retail investors about Bitcoin's long-term safety and independence. Fina's real message: Bitcoiners might be setting themselves up for a hard lesson. If early holders cash out during this euphoric phase, the crash could be sudden and sharp. We try to warn them. Fina says whether anyone listens is another story. And do not forget to subscribe to Bitcoin Zelle. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.